Okay, so the first question, you have seen this similar questions in the you know midterm exam. Okay, so you were provided with a table. Okay, so you have year 1, year 2, year 3. Okay, and then for each year, you know cumulative costs incurred. Okay, and so 16.5 for the first year, and then additional cost to complete. So that, of course, this would be based on estimated, right? As estimated at year end. Okay, so this is gonna be 49.5 for the first year. Okay, so I'm just writing down everything in a paper. So amount invoiced to customer in that year. So you know this question really well, but I'm gonna explain this question again one more time. Cash collected in the year from the customer. Okay, so 10.5, 25, 12.5. Okay, so let's take a look at the calculation. Okay, so I'm going to stop share this screen. I'm going to share another screen. Okay. Awesome. Okay, here. So that's the question, okay? And the total revenue, contract revenue, that is the 48 million, okay? 48 million. Okay, I'm gonna change the pen, change the color, okay? So we need to know what's the revenue for the first year, right? So based on percentage of completion, right? We have to based on the percentage of completion. How do we estimate the percentage of completion? So we are using cost to cost method, right? So in year one, okay. So you have first cost is the cumulative cost, okay, up to the end of year one, which is 16.5, and divided by total expected cost, right? So total expected cost has two components. The cost cumulated that occurred so far, plus estimated additional cost to complete, right? And this is for year one, that's the 49.5. So I have 16.5 divided by, this pen is not working very well. This one. So you have 16.5, okay, divided by 16.5 plus 49.5, okay? So that's gonna be, what is that? This is gonna be 66. That's 66. That's a 66. Okay, that's a 66. So what is this percentage? Okay, I didn't get my calculator. Okay, so 16.5 divided by 66. So that is 25%. 25%. Okay. So what's the revenue to be recognized? Okay. So the revenue, okay, I can recognize that this year is, okay, the revenue recognized for current year, okay, that equals, okay, cumulative revenue that should recognize by the end of this year minus cumulative revenue recognized up to previous year. Okay. So you want to know what's current year's revenue. Okay. So the current year revenue is equal to the total cumulative revenue up to the end of this year minus the total cumulative revenue up to the end of previous year. And the difference is the current year's revenue. Okay. So now, this cumulative revenue, we are using the percentage of completion up to the end of this year. That's 25% times total revenue, 48 million, and minus cumulative revenue recognized up to previous year. So because this is year one, right, there is no previously recognized revenue. So therefore, this is 0. So the revenue we should recognize in the first year is just, okay, just 12 million. Okay, and the cost of sold, cost of sales, that equals the actual cost, right? So the actual cost, we know that is 16.5 million, right? So remember, right? Remember, we have to also make assessment whether this is onerous contract based on the year one information. Okay. So you can take a look at the total estimated cost is 66 million. That's the total estimated cost for the project. This is more than the contract price, 48 million. We know this is the onerous contract. Okay, onerous contract. And the total expected loss, will be 66 minus 48, 16 million, right? This is a loss of 16 million. Remember, we know there is a total estimated loss of 16 million at the end of the first year. So we have to be able to recognize this amount, right? We have to be recognize this amount. So right now, okay, right now, you have 12 revenue, 16.5 cost of goods sold. The difference here is a loss of 4.5 million. Okay, you need to make it to be 16 million, right? So the other one would be the expected loss. Expected loss. So that's going to be 11.5 million. 11.5 million. Okay, and this number you can calculate by 16 minus 4.5. Okay, or this is just 75%, right? That's the percentage to be completed times the expected loss. Okay, 16. So 75 times 16, what is that? So what is that? I see the other document. So that's going to be 75, yes. So that's going to be 4.5. Okay, so the loss, expected loss in the future is going to be 12. Okay, so how come it's 12? So 66 minus 48. I think I'm wrong here. So that should be 18 million. Sorry, I am sorry. That's a typo here. So it's 66 minus 48. That should be expected 18 million of loss. So this gives me, okay, let me do a calculation here. 18 times, okay, so that is a 13.3. Okay, and this is a 13.3. So 18 minus 4.5, that's a 13.5. Okay, so basically we are saying you are expected the loss of 66 minus 48. That's the total expected loss, 18 million. For current year, you have a $4.5 million loss. So the expected loss in the future is going to be the difference. 18 minus 5.4, sorry, 18 minus 4.5, you have 13.5. Okay. So another way to get this number, 13.5, is through this. So 18, that's the total expected loss. The future percentage remaining is 75%. So 75% times 18, that's 13.5. And your total profit, I think, that should be $18 million loss. This is for year one, right? That's for year one. So I hope this makes sense. Okay. Let's take a look at year two. Okay, year two. Okay, how should I do this? I'm going to use another paper. Okay, let's do year two. Okay, again, let's calculate the cumulative percentage of completion, right? What's the percentage of completion? So that's the cumulative cost incurred, okay, to the end of year two, right? Divided by total expected cost, okay? So at the end of the year two, okay, the total cumulative cost incurred is 36. And the total expected cost is what had already occurred, 36, plus the cost expected in the future, 12. Okay, so I have 36 divided by 48. So this is going to be 75%. Okay, I think, yeah, 75%. So what's my revenue for year two? Revenue for year two, okay? So that's going to be the cumulative revenue should be recognized by the end of year two minus the revenue that has been recognized by the end of year one. So I use 75% times 48 million. Okay, because you completed 75 by the end of year two, you should recognize. So that's going to be $36 million revenue. By the end of the year two, you should recognize 36 millions of revenue. And the revenue you recognize for year one, you need to take that out, right? For year one, you recognized 12 million. Okay, I think you recognize 12 million, right? Yeah, 12 million. So that means, okay, you have to recognize 24 million for year two revenue. So first year 12, second year 24, together that's the 36 million to recognize. Okay. Okay. So at this point, the total cost is 48 million. So that's equal to the contract price, right? So now it's not a losing position. This is not a onerous contract. Okay, not an onerous contract. So now the cost of sales. So this is gonna be how much for year two, right? It's for year two. So the cumulative by the end of year two is 36. Previously, the cost is 16.5. So the cost for year two is 19.5 million. 19.5 million. Okay. So now at this point, so what is the, so now you have a 24 minus 19.5. So you have a 4.5 million income, right? 4.5 million income. So because it's not onerous contract, you have to reverse the expected cost, expected loss. Okay, so in year one, you recognize a $13.5 million expected loss, right, due to the onerous contract. But now, you know it's not an onerous contract. You have to reverse that entry, right? You're gonna have a $13.5 million. Okay, so what's your profit? Your profit will be 18 million. Okay, so that's very interesting. So in year one, you recognize a loss of 18 million. Okay, and in year two, you recognize an income 18 million. So the 2 years together, there is no profit, right? And that's exactly what we expected. Thus, the cost equals to the equals to the price, right? So you are not expecting any profit from the project. Okay. So that's my year two and year three. Okay. Year three, this is the last year. Okay. Completion. You can see that additional cost to complete is 0. So that means no further cost needed. That's because the project is completed, right? So now you know the total cost is 54 million. Okay. So the percentage is 100% complete. So the revenue for year three, 100% times 48 million minus what's the cumulative revenue recognized by the end of year two, right? We know that number. We know that number. That number is 36 million, right? 36 million. That's how much we recognized cumulative revenue by the end of year 2. Okay. Okay, so now minus 36 million equals 12 million. That's how much revenue we have for year 2. Cost of sales for year 3. That's gonna be total cost, cumulative 54, minus year 2. By the end of year 2, the cumulative cost is 36. You have a $18 million loss. Okay, and then what's your profit? You have a 12 minus 18, $6 million loss. Okay, so this is what happened. Okay, in year 1, your profit is $18 loss, and then year 2, you have $18 million revenue income. Year 3, you have a loss of 6. So together, when you sum up the 3 years together, you have a $6 million loss. Why? Because the price, total price, is 48 million. Total cost is 54 million. So total profit will be $6 million loss. Okay, so I hope this makes sense. I hope this makes sense. Make sure you are going to show that calculations. Okay, you are going to show the calculations.